Hello, friend. Welcome back. I'm Vishal Mehta, founder of MarketScanner.in. Today, we're going to talk about a very important point. We have got so many requests to talk about something called as price action trading. What is this price action trading and how can I actually, as a trader, benefit from it? So, let me just demystify this concept of price action trading today. Now, as you can see, the price action secret, there are so many ways you can actually trade the prices. And when you are in the market, I'm sure you would have heard of a term called as Bhav Bhagwan che. The price is the king. And that's the very important thing because as a trader, we believe that whatever the information is available out there is reflective in the prices. The greed, the fear, everything is in the price. And that's why if you understand the secret behind how to trade the price action, I think so you can be a very good trader. So let's understand what is a price action and price action trading. In this, so trader makes a decision based on the price movement of an asset. That means he's not concerned with the news at all. He's just looking at the price, and make a trading decision based on the same. In simple term, it is a trading strategy based on the movement of the price rather than indicators. Here, I've introduced another layer that a price action trader, barring one indicator that we are going to talk about, does not look at the indicators at all. He just looks at the movement of the price and the underlying volume and take a trading decision. Price action traders are concerned about the price at the time they are trading. What does that mean? That means that they are not interested what is going to happen, say in a 1 week's time or what's going to happen in a 1 year time. They are mostly intraday traders or maybe a swing trader who's going to swing for 1 or 2 days or maybe maximum 1 week, but they trade the time frame that they are trading on. So that's the most important thing for you to understand, that price action traders are usually mostly intraday traders and very few who will look at the price action for a longer time frame. And the beauty about it is there are many price action strategies, but in this short video we're going to talk about the most important price action trading strategies that I believe and I have traded for myself and which can be helpful to you. So let's talk about the secret number one, the 15 minutes breakout. So use a 15-minute chart. So a question would come to your mind that why we should be using 15 minutes? Why not 5 minutes? Why not 1 minute? Guys, remember this. We are not 24 hours market. We closed at 3:30 and next day we open at 9:15. Now there is so much of information and so much of news, so much of event that happens during this period. So in the morning, you will see lot of traders and lot of volatility. But once that 15 minute is passed, so by 9:30 the market settles down and consumes all the good or the bad news and the volatility of the market, and it decides the range. And that's why we actually prefer to use a 15-minute chart. Now, the rules is very simple. If we break and close above or below the price action of the first 15-minute candle, in that we're going to track the high and the low of the first 15-minute candle and make sure if there is a close above, then we go long. If the prices goes below it, we go short. So if we break upwards, the trend is usually bullish and we look for a long position on that security. And if it breaks downwards, the trend is usually bearish and we'll look for a short position on the stock or an indices. So now let's look at this chart. Here I can see there is a range defined in the first 15 minutes. You can see we have marked the range. And now once we have crossed this range and there was a closing outside the range, in this scenario also there was a closing outside the range and we are looking for a bullish trend day. Let's take another example on the downward side. We can see in the first 15 minutes range, we have marked the ranges, and once there is a closing below the ranges, we could see there is a clear cut downward bias in the market. So lot of traders uses this 15-minute breakout range from a price action point of view. Let me share a secret with you. Like, are you going to take every 15 minutes breakout range? Many do take it, but what I've realized over a period of time, the best 15-minute breakout ranges are the ones where you have an open below or above the previous day's high or low. What do I mean by that? When there is a big gap up or a gap down, and once there is a breakdown from that 15-minute range of that day, that turned out to be a very good signal for a trend day of this bullish range or a bearish range breakout. Let's see this scenario for that matter. This open was way below the yesterday's low, and you can see this turned out to be a very good trend day on the downward side. And let's talk about on the upward side. We can see over here there was a open above the previous day's high. So once there was a closing, there was a continuation of the trend, and that is a very good indication that that day can be a trend day. Now let me share a secret to gap up reversal. If a stock or index opens a gap up and breaks the previous day's high and closes below the previous day's high on a 15-minute time frame while forming a bearish reversal pattern, I'm sure there is too much of an information what I've just talked about it, but it will get very easy when we are going to look at the chart. Now, let's look at the chart over here. For that matter, if you look at this chart, there was a gap up above the previous day high, and we waited. If we would have taken the previous if we would have waited and we would have taken the previous 15-minute range breakout, we could have got one short signal over here. But another confirmation came in when we actually closed below the previous day's high, and that is a good indication also that when the market gapped up, there was too much of optimism in the market, but that optimism was not able to have a follow through, and during the day it faded, and the sellers actually started booking profits, or there were new short sellers who took an opportunity to dump their shares to the greedy people who started buying at the opening. So there was a gap up, then we had a closing below the previous day high, and we can see the prices going on the downward side. Now let's take another example. Again, we have taken an example where the market gapped up above the previous day's high. If we would have taken again the range breakout, our entry would have been coming over here. But here we are talking about a confirmation, and the confirmation came in when it closed below the previous day's high. That means all the people who got into the trade thinking that the market is going to go up are stuck now, and they are going to put their stop losses just below this previous day's high, and they start getting triggered, and you can see the prices falling down. So that's the beauty about it. Sometimes taking a contra trade to the existing market behavior also rewards you. And as we say, trend is your friend until it bends. So gap up was telling you there was a trend on the upside, but once there was a closing below the previous day's high, that means the trend is start to reverse. And at those conditions, sometimes you may see prices again reversing back. The best thing is to take a small loss and get out of that stock. So we can see over here there was a gap up, and then there was a closing below the previous day's high, and we can see the pricing actually colliding or collapsing on the downward side. Let's talk about the secret number 3, and this is the only place where I would have used an indicator from a price action point of view. So VWAP trading strategies help active traders to identify trade by factoring in both price and the volume of that security. Now this is a very important point. Up till now we just talked about price action and price action, but that does not mean that you should not consider volume into your trading setup. Volume can also give you a very good insight into what's happening or what's going to happen in the stock in the coming days. And that's where a VWAP indicator is nothing but a volume weighted average price. So it gives you the confirmation of the price and the volume. And VWAP trading strategies used to determine the market trend. As we can see from the chart, the prices are above the VWAP, and once the prices is above the VWAP, that shows that there is a positive underlying trend, and that is a bullish scenario. How about bearish scenario? We can see whenever the prices are below the VWAP, that tells you there is a selling pressure and the traders are getting aggressive. Whenever the prices are falling, they kept on selling more and more and more. And guys, this is a very important indicator because I worked with a lot of institutional. They also keep a track of this VWAP for their entry and exit. And now if the prices is just oscillating between the VWAP, we know the market is going to be a range bound scenario, and you really want to develop a strategy which is more range bound in nature rather than trending in nature. And why this range bound behavior is very important for you to learn from a price action point of view is because a lot of institutional traders, they actually keep a track or put their buying and selling orders near the VWAP. So assuming something has moved up too much too fast, they actually try not to run the market. They will try to place their orders near the VWAP. And once the prices are coming near the VWAP, you may see some kind of a support or a resistance kicking in a sideways scenario. And that's why it is very important for you to understand whether the VWAP is in a sideways moment or it is trending like this in this scenario that we are looking at. So once you understand the price action, the VWAP, and you start building the philosophy of price action, there is a very high chance that you will be a very good discretionary trader. So let's understand what are the pros and the cons of using a price action trading. What are the pros? What are the benefits? It requires less research time. You are in front of the system. You are looking at the price at that moment. You don't have to prepare like too much early. You can see the prices as it is. You get more favorable entries and exit than the indicator trading. This is a very important point because a lot of people use indicators like RSI, Bollinger Bands, and everything. They are all derived from the price. Remember that, guys. They are all derived or they are the derivatives of the price. But what are you trading? You're trading the price itself. You're trading the king itself. And that's why you will always get a favorable entries and favorable exits. You can actually test them on a simulator. What you can do is just go back into many of the simulator and run play by play mode, and you can actually train yourself much better to be a price action trader and use the strategy that you want. Either you can be a breakout trader or a fading reversal. Depending on your style, you can actually trade the price action. So if there are benefits, there are also disadvantages. So what are the disadvantages? Few of the price action trading you can automate, but most of the price action that we talked about, like a VWAP or the reversal, usually you cannot automate them. It requires more effort and focus. Why would I say so? Because when you are doing a price action trading, you need to be in front of the screen to make those decisions. Because when there are gap reversals, there is a lot of hunch feeling that also goes into the trading, and that requires you to be in front of the screen. And very importantly, every trader will read the signs differently. What does that mean? That means that a price action trader may look at the prices in the same situation differently. If there is a gap reversal, somebody will look at for a reversal to happen, and if the prices breaks down on the gap up scenario, somebody may short that. So depending on the situation and the experience of the traders will interpret the price action little bit differently. So this is the crux of using an price action. And guys, if you like this video, please do mention in the comment section of what are the other things that you really want, and we can build short videos around the same.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.